Kubi, it's great to speak to you today. I want to get, first of all, a sense of what's happening in terms of the flows out of Nigeria. What I'm hearing is that some investors are taking money off the table, moving it elsewhere.
Hi, Wole. Yes, for the first time this year, we've seen a bit of reversal of the trend. I mean, I've come on air all year, and what we've been seeing before now is steady flows, portfolio flows coming in, taking advantage of a very investor-friendly climate in terms of short-term money market investments. You can come in, and there's a lot of freedom to go out. So now we can see corporates maximizing on that freedom and moving money out because you know there's no time restriction. So we're seeing a net outflow for the first time this year.
I thought a very interesting number that the central bank governor shared yesterday was the amount of, as he put it, hot money in the system. He put it at about $5 billion. That's how much has come into the market over the last year since they removed those restrictions, as you mentioned. Give us your sense of the impact of that. If like a scenario that was painted yesterday, if we could see a major outflow as much as $5 billion, I mean, in a worst case scenario, what impact would that have on the Naira?
Well, what I think, I mean, it's pretty obvious. Two things would happen. One has already happened now to a fairly small extent. The first thing that would happen is that you would see the official rate for the Naira moving towards the upper band of the 3% limit. Because reserves have been able to accrete during this period, we have pretty robust reserves, well above 35, in fact, above $36 billion. The reserves can take it, but of course there would be a depreciation in the official rate. The second thing that will happen, again, we're already seeing it happen, is that there will be a divergence between the autonomous rate and the CBN rate, and that we've seen this week. For the first time, there's about a 1%, a 2 Naira divergence between what CBN is offering, what the interbank is offering, and then at the same time, the parallel markets, the man on the street, we're seeing 4 Naira. We haven't seen those kind of divergent levels for most of this year because, of course, demand has been soft and there has been supply.
Where is the Naira now in the interbank market? You just talked about the divergence.
About 159.30, 159.50.
All right.
You know, depending, yes, that's where it has trended up from 158, maybe 158.50 at the end of last week, and up 2 Naira from 157.40.50 from 2 weeks ago.
Is this something to worry about in your view? I see that the central bank is stepping in. Today selling $200 million at the WDAS auction.
Yes, of course, they have that option. As demand creeps in, they can always alter the amount they sell. And we've seen, we've seen a trend. Earlier in the year, they were offering between 120 and 150 per session. We're now seeing a significant, maybe 150 to 200. Last year, we saw as much as 250, 300 on offer. So they always have that option of upping the amount that they're going to sell slightly, and that's something that we've seen happening. Is it a cause of concern? Not yet. Again, there seems to be some stability in Greek. We're seeing a move in Greece. We're seeing a move from severe anti-austerity to, what the tone we're hearing now is we'll stay in the euro. So that may calm a bit of the nervousness in the world markets, but, we're watching that over the next few weeks.
All right, of course, the MPC decision was out yesterday. It was widely expected that the central bank would leave rates unchanged at 12%. But how has the fixed income market reacted at all, if there's been any reaction?
Well, again, that's a point. The fixed income market has tended to move kind of independently from what the CBN has done. This is the fourth meeting in a row that rates have been maintained. So there's some sense of monetary stability. However, all year, fixed income rates have been on the decline. Yields have been on the decline because there's been such a demand. Again, what have we seen in the last couple, 2 to 3 weeks? No, I would say maybe in the last 1 week, we've suddenly seen a case where yields have started to rise again slightly, not at the 15.5 levels yet, maybe just above 14. The last auction, rates were the lowest year to date. They were, all tenors were sub 14%, 13.9, I think, at the highest. Now we've crossed the 14% threshold again, and there's a primary auction today. We're waiting to see the results of that.
Would you say that this rise in yield, to some extent, is also connected to the selling you mentioned earlier by foreign investors taking money out?
It's directly connected. You can actually see the activity directly.
All right. Okay, let's talk very briefly about the bond market. Of course, the short end is where a lot of focus is for the foreign investors. Yeah. But what's the activity you're seeing in the longer end of the curve?
Well, the long end of the curve has pretty stable. We've seen a slight rise in yields. There's less activity there, even from, I think, pension funds. But at the short end, we've seen prices go up and yields drop. maybe interest from foreign investors. But all this while, most of the flows we've seen have been in the Treasury bill and not in the bond market. The bond market is more affected by internal players like the pension funds and the banks.
And how active are they recently? How active would you say, particularly the pension fund investors?
I think they've also concentrated. Again, they've split, maybe it's an 80-20 split. The Treasury bill market has been very exciting. That's been where most of the action has happened. Apart from the regular primary auctions, there are also secondary market, almost sessions. There was one today, but there were no sales, maybe due to high rates. So that shows that the central bank themselves don't want too much of a dead burden in terms of interest rate servicing. Right. So nothing happened there. All
right, Kubi, we have to leave it there. Thank you so much for that update. Okay, Kubi Momoh, Head of Market Risk at UBA.